Westpac is the latest bank to record a massive plunge in first-half profits, earnings dropping to their lowest level in almost 2 decades, as the new man in charge predicted tough times ahead for many Australians.
A pandemic and some own goals delivering Westpac a painful kick.
Extraordinary time. The bank is dealing with the twin impacts of COVID-19 and some of our own issues, regulatory issues.
It's a challenging time too for new CEO Peter King, who insists the balance sheet is strong.
We delivered a $1.2 billion profit. It was down 2/3.
Cash profit has plunged 70% to $993 million. The bank is bracing for a $1.6 billion hit from COVID-19 losses, and it's set aside $900 million for a potential penalty from an AUSTRAC money laundering lawsuit, which includes alleged failures to properly vet payments facilitating child exploitation. As for the economy, it's expecting a decline of more than 8% by September and unemployment to hit 9% in June. That will feed through to property prices and deliver a big plunge.
And the best thing for the bank and the economy is more customers going back into employment or back to their businesses.
And there's going to be less cash circulating through the economy. Westpac won't be paying out a dividend to shareholders for now, saying it's taking the advice of the banking regulator and will hang on to the money.
For retirees who need to live off the income from their investments, obviously, income's getting hard to find with interest rates very low, and as we're seeing, dividends from many companies are drying up.
Despite the uncertainty, analysts say our banks are in better health than 12 years ago.
The banks basically have double the capital they had going into the GFC.
Helpful in these risky times. Gillian Bowen for 10 News First.